Why is venture capital so uneasy with the world's largest customer? The US Department of Defense is the world's biggest customer and is often eager to work with innovative companies backed by venture capital. Unfortunately, most of the largest venture capital firms in the United States are often gun-shy or have a misunderstanding when it comes to backing companies looking to tackle big federal markets. But why is this? Are they being foolish and leaving money on the table? Or do they understand something very important? To dig into these questions and more, our panelists represent all facets of the conversation. Please welcome back to the stage Ryan Evans, the CEO of Bedrock Learning and co-founder of War on the Rocks. I'd also like to introduce Dan Guoc, managing partner, Point72 Private Investments, Morgan Beller, general partner, NFX, Dave Tremper, the Deputy Assistant Secretary of Defense for Acquisition, Integration, and Interoperability at the Office of the Secretary of Defense, and Tess Hatch, Vice President, Bessemer Venture Partners. Ryan, over to you.
Thanks so much. Great to be back on the stage, and great to be here with such a great group of panelists. I'd like to tell you a little bit more about them, starting with Dan. Part of Point72 that he runs is the institutional private investing business. He also oversees Point72's Ventures, Defense Tech, and Growth investment teams. And before joining Point72, he was a partner at In-Q-Tel, the strategic investment arm of the CIA and the United States intelligence community. And he's also a Marine veteran. Morgan is general partner at NFX. She was the co-founder of Libra and head of strategy for Novi, Facebook's digital wallet for Libra. Before Facebook, she ran corporate development for Medium. She started her career, well, her bio says she started her career on the deals team at Andreessen Horowitz, but I learned backstage that her introduction to Disrupt was actually volunteering at Disrupt when she was 18 years old. So welcome back. I think that deserves a round of applause.
Thank you.
Dave is this is a very wordy title, Deputy Assistant Secretary of Defense for Acquisition, Integration, and Interoperability, and one of the things I'm going to ask you is what all that means. And he's responsible for strategies that involve fielding a lot of different capabilities for the US military. I think that's the most simple way I can explain it. And before being at the Pentagon, he was at DARPA and the Office of Naval Research. And then we have Tess. Tess Hatch invests in technology and people who believe as strongly as she does that frontier technology will develop solutions to societal problems. She is a partner at Bessemer, fostering entrepreneurship of these technologies, specifically the commercialization of space, drones, autonomous vehicles, and climate tech. So, you know, some of the most pressing problems of our era. And I'm really excited about the discussion we're about to have. And starting with you, Morgan, it's not so often that people pivot from crypto to space, so I'd like to hear a little bit about that. And do you think government has been too slow to embrace both of these technology areas?
Short answer is yes, definitely for crypto, less so for space. But to rewind, so as mentioned, I was at Facebook prior to this, Meta, as I was corrected backstage, now Meta, and started the Libra cryptocurrency effort. And I'm speaking for myself, not on behalf of Facebook, but what got me out of bed every morning was China. And I think the Belt and Road Initiative, phase 1, physical infrastructure, roads, ports, et cetera. This was like 6, 7 years ago, so people thought I was crazy. I am, but to this point. Phase 2, 5G, Huawei, which was also confirmed. I believe that phase 3 is money, and phase 4 is space. So my boss at Facebook, David Marcus, had to testify in front of Congress twice for Libra, and there were several senators who said, hey, people think nukes are the US biggest defense weapon, but it's actually the US dollar. And if you believe that the future of money is digital, not physical, which I think is just fact, then the US government's kind of shitting the bed on that. Am I allowed to say that?
Yeah.
And China gets it. So that was a big motivation behind Libra. You're like, okay, China has, 4 billion people are under authoritarian regimes, and therefore, like, those leaders would probably love to have forms of money where they can more easily track who's using it, how it's being used. So if you look at the Western world, there's 2 companies that could launch that type of asset to a similar sized group of people, and it's Facebook and Google. So that was my motivation behind it. Of course, the headlines never will or did tell that part of the story. So then fast forwarding to space, it's similar. where you're like, okay, if you love America, what do you think is important? I still think money is important, so I'm still working on that, but space as well.
Great, thank you. Dan, I want to direct really the title of this panel at you. Is why historically have so many venture capital investors been so overcautious, or maybe just cautious, I don't know, about investing in defense tech startups? Is it changing, and if so, what's driving those changes?
I certainly hope it's changing. I think I'll start with why are venture capitalists kind of uneasy with the world's largest customer. And just to set a baseline, I would say that a lot of that has to do with the fact that up until about 5 years ago, a startup pursuing government money was generally a pretty bad idea. It was a tough market to crack. Sales cycles were longer. How to make the sale was less certain. Unlike most rational commercial sales, the budget, the user, the authority, all these things were disconnected, didn't even know about each other, right? Startups need to operate at a sales velocity where they are proving something every quarter, every year, right? And when you've got a sales cycle that takes 3 years, that just doesn't really click for startups. And so, up until 5 years ago, I would say it was legitimately a bad idea to fund startups that were going to pursue the government as the primary customer. So, what's changed? Clearly something's changed because we're big on defense tech, right? In my mind, the catalyst has really been that when there is a technology wave that has the potential to shift the global superpower balance, suddenly the government gets a lot better at buying things, and the prize for delivering that kind of shift is worth those 3-year sales cycles. And both of those things are happening right now. If you think about the technology waves that we're looking at today, AI in all of its forms, whether that's autonomy or computer vision or natural language processing, machine translation, things like that, for the first time in a while, these are technology waves that each can shift the global superpower balance. And we couldn't necessarily say that about prior technology waves. Take like the .com boom, right? The birth of the internet absolutely changed the face of how knowledge gets shared on the planet, but it wasn't necessarily going to make or break superpowers. Similarly, mobile, right? I mean, it just has completely changed our lives as consumers and how we interact with commerce and data, but it wasn't going to shift the global superpower balance. When you think about aerial autonomy, marine autonomy, space assets, these things actually can shift the global superpower balance. The last time you saw a technology with that kind of potential was in the pursuit of the nuclear bomb. And if you think about what happened during the Manhattan Project and how the government was able to just move heaven and earth and put resources on a problem the way that really only the government could, I think we're facing a similar catalyst today. And so that's really the catalyst for the change. And there's a bunch of kind of messy things that need to be worked out in the pursuit of that, but at least that catalyst is there.
So if you're still facing, let's say you're starting a company or running a more mature company, Tess, and you're facing that 3-year sales cycle, that can be a little daunting. And going through it myself, actually. And so why should founders and whether it's a founder of a startup, whether it's a growth stage company or a more mature company than that, why should they consider selling to government, maybe even first before corporates?
It's definitely daunting. It's cumbersome. There's a high barrier of entry, and there's potential risks when selling to the government. And Dan, you mentioned some of them, but I'm going to dig into others, but also the pros, and hopefully convince some of the founders or people running companies in the audience to consider a business to government product and sales function early, potentially even first. So why should you consider the government? It's the largest potential market, the largest market, really loyal customer. You're also not worried about them going out of business and not being able to pay for your product. Really strong brand, and they'll buy large contracts and even expand, increasing your net dollar retention. Along the journey, they'll give you grants, lovely non-dilutive sources of capital. I'm sure this panel will say things like SBIRs, Small Business Innovation Research Grants, and IDIQs, indefinite in quantity, a bunch of acronyms, just the government giving you free money to help your company and your technology. And there's also a sense of, in some cases, it's the right thing to do, a sense of patriotism. Those all sound really good. there's some reasons not to. Dan mentioned already, really long sales cycles. It takes years sometimes to get to a significant contract, let alone recurring. It's bumpy, it's lumpy, it's unpredictable. You'll have a really busy Q3. The fiscal year ends in September. People need to use their capital budget, so it's kind of unpredictable. And lastly, it is cumbersome. There's regulations, there's various things that, as a startup, it's either too expensive or not a core piece of the company to focus on at that time. But rambling aside, I think you should, at least yearly, if not more, consider a go-to-government product and therefore sales team, because it is the largest market, it is a really strong customer, and that it can bring your startup that reputation and significance that it's difficult for a startup to get, but you can with the DoD being a customer.
And Dan and I did a podcast with someone from Leonid, which is in the debt business focused on defense, and we learned that fewer than 1% of defense contracts actually get canceled, and even those that do, I think over 80% of their funds have already been spent, been delivered to the company. So there is that reliability, and the R&D funding can be considerable and can be in the millions, and it is non-dilutive, but there's still major problems, and Dave's going to tell us how he's going to single-handedly fix all of them. So Dave, sitting in the Pentagon, first tell us what your job actually is, because my understanding is it's a newer position.
It is, yeah. So I was previously, as of about a year ago this time, I was the Director of Electronic Warfare for the Department of Defense, and while I was in that job, I was really harping about how if the Navy's building a capability and the Army needs the capability, we need to be able to move that capability quickly between the services rather than have the Army start investing in the same capability. And we see that happen a lot in the Department of Defense. You get these essentially a cylinder of excellence where the Navy has Navy missions, so they focus on their investment, so they're not looking at what the Army and the Air Force are doing, and you have potentially some redundant investment that's happening across those things. So in the world of electronic warfare, you see that well, I'm countering the electromagnetic spectrum, and so if I'm building it for the Navy, then it's equally useful for the Army and the Air Force. And so we look at how do you implement software-defined architectures that allow Navy investment to be leveraged across Army and Air Force systems and vice versa. So now you get that compounding investment. So if the Navy builds it, then the other services get the benefit from it. You get the cost savings that they don't have to invest in it, and you get this ability to rapidly insert the capability across the services. Well, while I was harping about that was this recognition that, you know what, we've got a joint acquisition problem in general, right? That if we're going to try to deliver a new joint mission to a combatant commander who's responsible for the Indo-Pacific, for instance, or it was a 4-star commander responsible for that domain, that we really want our systems to be interoperable. We want to be able to support the joint mission so that the Navy system talks to the Air Force system, talks to the Army system. But the way we do acquisition today, it's very service specific, and that dependency between the services, the requirements that potentially need to be put in place to ensure the integration across the services isn't inherently there. So I was asked to stand up a new office, a new Deputy Assistant Secretary of Defense office on the acquisition side, acquisition and sustainment side of the department, that looks at how do I ensure that when systems are being delivered by the different services that they are inherently integratable, so that when they show up out in the operational field, the aircraft can talk to the tank, can talk to the ship, and it's inherently there, and it's not something that we have to go back and Band-Aid fix afterwards. So it is a mouthful. DASD AI2 is kind of the way we shorten it down when we're talking about it. I think one of the key pieces of this, though, is that word integration. And so when we talk about innovation, we talk about new technology, right? In the Department of Defense, that exists within the science and technology world, the S&T side. And that aligns with the research and engineering side of the Office of Secretary of Defense. So if you're familiar with the Office of Secretary of Defense, there's a variety of different undersecretaries. One of them is research and engineering, which is where science and technology innovation happens. There's also the Undersecretary for Acquisition and Sustainment. That's where you have your big programs, like your F-35 and your new submarines and JADC2, and all those things are massive programs where there's a lot of money being spent on the acquisition of a program of record, right? So that all happens on the acquisition and sustainment side. When an innovative, disruptive technology shows up, it doesn't show up on the acquisition side. It shows up on that science and technology side. So you'll have investment pots that are paying millions of dollars, right, to mature a technology so that it demonstrates a military relevant capability. right? So maybe you demonstrate out on a ship that I have this new technology, this innovative system that's disruptive to the way we do warfighting, and it's available on a ship. I've got a valley of death, for lack of a better term, right? We know that term, valley of death. There's a valley of death between what I just demonstrated on a ship and having that integrated into the shipboard systems with operators trained, all the authorities in place to use it, and the approvals for it to connect with the rest of the systems on the ship. So there's an integration challenge that happens even after you demonstrate the most game-changing technology, and that integration piece of it is critically important. It means you have to understand what that gauntlet is. What are the steps that you need to go through that gauntlet after you've demonstrated the force field that can save the Earth, right? If I don't have a requirement for a force field to save the Earth, well, then I'm not going to get big money to put towards investment in the force field to save the Earth, right? So we have to look at how do you do those requirements processes, how do you set up a program. Historically, the requirements process, the way that we analyze and determine that I have a requirement to do this, is separate from the request for money to do that, which is then separate from the actual acquisition to do it. And so if you put these all in serial, you see that each one takes about 18 months.
But now
and then when
we're
you get
seeing
to
not
the
only
acquisition stage, now you're talking about a 5-year or more program. So now you're talking about 10-year timelines between when I recognized that I needed a capability and I actually bring it out into the field for the first time, right? So what we're looking at within the department now is how do you parallelize those things? Can I use year of execution investment? So what I mean by year of execution investment means I have the authority today to invest in that, right? The way we do it now is I have to plan to invest in it in 2 years out. So I have to do the analysis, I have to determine I have a requirement, I have to get congressional approval to use that money. All of those processes take time. What we're looking at now is where do I have the authorities to use year of execution investment in a prototype system that would allow me to develop the requirements and the acquisition plan all in parallel so that I can deliver capabilities much faster.
So you're going to have that sorted out, what, in a week, 2 weeks?
Yeah, well, yep. So I just found my physical space in the Pentagon, and so shortly after now I...
No, seriously, what's the timeline for figuring this out? I mean...
So the Deputy Secretary of Defense, Hicks, stood up some initiatives called Competitive Advantage Pathfinders, and within those Competitive Advantage Pathfinders, we're looking at particular prototype capabilities where year of investment funding can be used to prototype a system and align it with what we call adaptive acquisition approaches, right? So the department stood up something called adaptive acquisition processes, which are new ways of acquiring systems through software pathways. So a software pathway software historically would have been treated like you were acquiring an F-35. Well, we all know that's not true. So new pathways were established that allow 6-month type of cycles for investment and implementation of software. Something called middle tier of acquisition, which allows me to do rapid prototyping right at the front of an acquisition program and skip a lot of the requirements process so that I can get to a prototype system much quicker. Within the Competitive Advantage Pathfinders are these CAP initiatives looking at, can I use year of execution authority that I have for prototyping, align it with my acquisition strategies so that effectively, as I'm planning for an acquisition program, I'm building the prototype. So that when the program of record starts, it's actually at a much more mature phase. So I'm potentially at what we would call a technology readiness level 7 or something that's been out in the field and tested the day that the acquisition program actually starts. And so when that acquisition program starts is when you start to see the real money show up for scaling, kind of maintaining, sustaining those systems, as opposed to that prototyping phase, which is demonstrating the proof of concept.
Well, this might be one of the most important jobs in the Pentagon right now. So stay healthy, take care of yourself. VCs, what are your reactions to what he just said? Is that encouraging, or do you think the Pentagon can pull this off? It's an ambitious plan.
Yeah, so ambitious plan. I think that what you can't discount is that good defense tech founders, sure, they're waiting for that to happen, but they also know how to execute in today's environment, right? The reality is, the DoD is a big place. It's not going to turn on a dime, right? And I think if we're going to build big defense tech businesses, the answer cannot be to sit around and bemoan how hard it is to sell into DoD. You got to be able to figure it out, right? That does take a very specific kind of domain expertise, right? A founder that can, understand real technology on the one hand, and also all the words and acronyms that were just shared is a pretty rarefied kind of founder, right? But the best defense tech founders, they will certainly benefit from a lot of the efforts that will make selling into the DoD at scale easier over time, but they can also execute today. And the way that they do it is, by finding in-year execution money as proof points that there is a committed user and that there is at least some budget, and proving that to defense tech-focused VCs who can appreciate those milestones, even well short of it being fully adopted into like a program of record or something like that, right? And so I would say, yes, those are all tremendously important efforts. I think in order for us to really maintain superpower status, we have to figure out how to make this easier so that the best technologists can devote their talents and efforts and build their 10, 20, 30-year careers, building technology that makes the nation stronger. But as a VC, we also have to pick founders who can operate in today's environment today.
Oh, sorry, go ahead.
Listening to you, maybe a con, if I may, is the venture capital industry and the DoD, we just speak different languages.
Yeah.
And I think at the end of the day, we're looking for the same thing. We have the same North Star. And a solution is, okay, have a founder, if they're taking venture capital money, with a former DoD background and understood all of the various offices and things that you just said, which I humbly do not. Or you and I work better together, whether that's through a handhold from like an aerospace corporation or an In-Q-Tel, Dan's former employer, whose job is to help venture capital and the DoD work, or more directly build those bridges. Just in translation, you say acquisition, which doesn't actually mean my type of merger and acquisition. It means a big, large recurring contract. I like that. So let's just call it that. And then it can help our companies some more infiltrate the DoD and sell to y'all.
No, that's extremely important. And that communication breakdown, I think, is a key thing that we need to resolve. And there are initiatives within the department that are looking at something like along the lines of a transition concierge service, right? That would essentially facilitate or shepherd non-traditional companies and small businesses into the world of that integration space. So instead of opening the door and saying, okay, this is how you get in, and here's the funding that you can go after, submit your proposals, right? Would actually provide a concierge service which would start to talk about what is the operational relevance of what you're talking about. And I think when you get into that proposal phase and Department of Defense reviewing, that becomes very difficult for people who haven't lived and breathed in that space for a long time, people who haven't been warfighters or operators or understand the lingo, right? Because they can't necessarily inherently tell you what the operational relevance of this disruptive technology is. Right? And so now you have people that are looking at this thing to try to decide what is the operational relevance with kind of the best tech developers in the world who can't necessarily communicate what the operational relevance is, and you end up with this communication divide. So when you can insert something like a transition concierge who can look at what is being developed objectively and say, here's where I think this is operationally relevant, I'm going to connect you to the acquisition program that does this type of thing, right? And so now you can foster that discussion. And now you can be the translator between the acquisition program and the tech developer to try to say, okay, this is what the acquisition program is asking for, and this is what the tech developer potentially provides. I think as it stands right now, there's a wall between those two communities. And when the proposal shows up, if it doesn't have the operational relevance that the Department of Defense is looking for, the technical merit, well, that might sound technically interesting, but boy, it doesn't meet the mark of what we're looking for because that communication breaks down.
Morgan, when you were, I don't know how many deals come across your desk, but probably a lot for all of you. When you're looking at a founder and a company that is interested in working with the Defense Department, how do you judge that they're actually proposing a product or a company that will actually fit, and how does that compare with the process you run with commercial-facing businesses?
So the first deal that came across my desk when I joined NFX was a space company called Stoke, and I'm breaking my rule today. I've never worn a t-shirt on stage, but we're here. And it was sent from a former colleague, Adrian Fenty, who is more familiar with the government world. And I was like,
best mayor DC's ever had, in my opinion.
That's what I've heard.
Yeah.
And I was like, I have absolutely no business investing in this. I was always the kid with like a telescope in my room, but I didn't study this in college. But I couldn't stop thinking about the company. So then when we met Andy and Tom, this was January 2021, I was like, I have a lot of work to do if I'm going to justify doing this deal. And the short answer is we did references. I mean, at the seed stage, the way I describe seed stage companies or any company is an equation with a lot of variables, and the only coefficient that is likely fixed at the seed stage is the team. So most of the references at that point were on the team, and we spoke to General Quast from the Air Force, who had worked with them both in their jobs at Blue Origin, and other folks like that who helped us get comfortable. But you're not rolling the dice at the seed stage. I have other thoughts, but I can.
Yeah, go ahead.
There. Well, I was also just thinking, like, this isn't a question you asked, but it's the question that I was staring at, which is why is venture capital so uneasy with companies that sell to this space? And I think something I've been thinking about a lot, because admittedly, Stoke was the first space deal we did at NFX, and we talked about how it was kind of breaking our rules. So NFX stands for network effects, and you have to like really use your imagination to see how Stoke's going to get there, and they will. But it required breaking the rules a bit. And as I've been thinking about that more, as like we've looked at more space companies, as space companies that we're investors in are raising, I'm like, the truth is, like, venture, this is where I'm like curious who's going to get mad at me, but like venture has more or less over the past 10 to 15 years, not that I know any differently, I'm not that old, but it has kind of been this get rich quick scheme where you invested in companies. It wasn't like more or less like things go up, like, you know, SaaS, things go up. And the hypothesis I have is that SaaS multiples are never going to be what they were. And that whole like get rich quick scheme is not going to be what it was. So then you're like, okay, and also there are like all these AI application companies for which the moats, I'm rounding up, so don't hold this, but the moat is like 0 for a lot of these AI application companies. So now you're like, okay, all of these industries that like actually have moats, like you're building a rocket, that is, I think, all of a sudden more interesting. And the timelines for any company to get to like public is going to be longer. So I think that areas that were previously not sexy, because the truth is it is like harder, longer. They have to buy metal, you have to do all these things that venture capitalists aren't familiar with, I think are all of a sudden going to become more attractive.
Yeah, and you mentioned SaaS. I think the as a service, sorry,
There are
is that me?
space SaaS companies, so it's not totally.
Yeah. But I think the as a service business model has yet to fully been accepted by the Defense Department. I think that's a future I'd like to see with a lot of defense companies. Tess, space is one of your big passions. What are some of the space technologies that you're most excited to see when they come across your desk?
Ooh. Well, before making predictions about the future, I think it's important to really quickly go back and note the technological trends or catalysts that have gotten the industry to where we are today, to then figure out where it's going next. And there were 2. First, the invention of the CubeSat. Decades of Moore's law exponentially decreasing the size and increasing the power of cheap commercial off-the-shelf electronics to allow for students, entrepreneurs, to throw a sensor on a tissue box-sized satellite, which really lowered the barrier of entry to space. Before the invention of this tissue box CubeSat, the only way to launch an asset into space was a school bus-sized satellite, the size of sometimes this room, that would take years, if not decades, and hundreds, if not billions of dollars to design, build, test, and launch. CubeSat was invented, but we had no way to get it up into space. So the second technological catalyst or momentum driver was the invention of the tiny rocket. Sure, SpaceX really helped get to it from space with a cheaper rocket, but it was still designed for the school bus, not the tiny tissue box. So now we have a new form factor to throw assets into space. We have a way to get to and from space, or better, what's next? What are all the exciting next technologies? There are folks working on manufacturing in space, pharmaceutical testing and manufacturing in space, private space stations in low Earth orbit, asteroid mining, lunar colonization, and beyond. I will say, though, the aerospace engineer in me is thrilled for all of these ideas. The investor in me is a little more skeptical, with a shorter return on her investment for her limited partners. So I'm not as convinced these are within a 10-year time horizon, but I've got some confidence in manufacturing in space. If Varda is allowed to come back down, they're producing pharmaceuticals up there, so that could be an exciting next.
So you heard it here.
Step.
Tess wants pitches on manufacturing in space. So
Exactly.
well, this was a great conversation. I know we could keep talking about this. I mean, for at least another hour, but we're not allowed to. Thank you all. Could we give a round of applause for our amazing panelists? This is great.
Thanks. for having us.
And thanks again to TechCrunch, and thanks to Lisa West and her team. Been great to work with on helping to organize the space stage. So thank you very much.